Welcome back to the Daily Hunt. I'm Henry Hunt, and I'm a trader, investor, primarily a swing trader, and I'm in the top 15 traders in the US Investing Championship to date. Today, we're going to be covering our daily market insights and analysis. We'll be breaking down stocks, crypto, commodities, gold, the dollar, and looking at what's been happening in the last few days. Now, if you've watched my last two videos, you would have seen that I was looking at these bearish divergences that were happening in the market, that were happening in stocks, that were happening in crypto, and there was also a bullish divergence that was developing on the VIX and the dollar. The idea there was that we were probably going to get a sell-off, and that's exactly what happened yesterday. And today we have some fundamentals that are coming in that I want to be covering, and a few other bits that I think are very, very important so that you guys can make some smart decisions in the market. So let's get straight into it. The main thing I want to cover is Palantir. Okay. Palantir has been one of the best performing stocks. In the previous video, I shared a chart which was Palantir Magnificent 7 plus Oracle plus AVGO, and it was the main chart that I was looking at. But Palantir here had a huge red day. As you can see, big sell-off. It was around 11% yesterday. And across the board, we saw growth stocks. I had a few of them. I had RKLB and a few other ones. Sell very, very aggressively, I would say, yesterday. I think there's a lot of fear in the market at the moment. The VIX is also showing some signs, like I mentioned in the previous video. So definitely watch those videos because you're going to get some insights as to how I was looking at the market the last 2 days. But Palantir is very important. And if we go into the Palantir plus Mags plus Oracle plus AVGO, you're going to see the chart that I was looking at in the last two videos. And here you go. The main thing for me was whether we were going to keep this trend line yesterday or we were going to break it. There was an early sign there that we were going to break it. I did mention in the video that I felt like we were curling downwards, and primarily that was because of the 20 EMA here moving downwards, and then this sell-off kind of cements a market correction or some sort of dip. I was expecting a 9% move. We've already got that initial, I'd say 6% here. Let's measure it. It's around 6%, 5.5. I was expecting at least a 9% move. And how I feel about this is even if we do move up higher, maybe we go back down again. So it doesn't look like a move where we're going to get an instant buy up and it's buy the dip euphoria coming in. I think it could be a lot of profit taking happening from the traders and investors that went into the stocks in early April. I was one of those guys, and I've been selling across the board and throughout this move up higher. So for me, I think we can even go a little bit lower here, maybe around this area or even down here, 17% on Palantir, which is growth stocks. But let's just be realistic and maybe a little bit cautious with our predictions here. And let's say this 9%. I think this will definitely happen. And I feel with this happening on the S&P 500, we're going to get a move which takes us below the 20 EMA. So if this loads up here, below the 20 EMA and potentially around the K to around 6K level. I think a 7% move would be ideal. As I mentioned yesterday, bearish divergence here, very, very important. It's still holding up. Maybe capital's flowing and rotating into other stocks in the S&P 500. If we go here to stocks and we go into, I think we have to go into daily, you'll see that it was a red day overall. However, we've seen the smaller stocks, finance here, health, tech, consumer, durable, etc., do pretty well, right? So money's been flowing and rotating from the large caps into the medium caps here. So from the Mag 7, 1, 2, 3, 4, 5, 6, 7, or maybe even 10, 12 companies that have been doing really well into the smaller companies in the S&P 500. I think this chart is pretty, this heat map is pretty telling here of what happened yesterday. Now, whether that's going to continue, it's something that I need to look into in the next few days and see whether we should be putting our money into these smaller medium caps. So let's go back to the S&P. An ideal scenario would be we go 7 to 8% dip, and then we have some consolidation here, and then a buy up again. This would be good. It would be a nice correction in the market, and it would be what's probably needed after a move that took us around 35% from the bottoms here. And then, yeah, if we can go to this level, it would be ideal. Maybe up to 9%, but 5% would be a normal correction, would probably coincide with that 9% move on the Palantir and the growth stocks and the best performers during this period. NASDAQ, something I should mention here actually is we're still within the channel, right? So if we go into the S&P 500, we are still in this channel. So it isn't something that we should be very worried about. But I think for our portfolios, if you're invested in growth stocks like I am, and some of the leaders like Palantirs, the Teslas, etc., you probably should be getting out. I think those are ones we'll be selling off. Now, for the S&P itself, I think it could find support on the lower level on this channel, this trend line moving upwards. It could find support on the 20. It could also find support on a dip here, like I mentioned on the Fibonacci levels. I personally don't like to use Fibonacci's too much, but you know it does get respected by the S&P 500. I tend to find that those levels are respected by traders and investors. Bearish divergence for me is probably the most worrying factor, and the fact that we've been on a big move here from April all the way to August, about 5 months of gains, or is it 4 months of gains? So yeah, I mean, it makes sense that we go down a little bit and we retrace. NASDAQ, very similar. Let's look at where the NASDAQ is. NASDAQ, because of that sell-off from the big tech, you're getting a test of the 20 MA. I would want this level to hold up if we are still bullish. If not, then we break and we go below. I felt like this was probably the main chart to look at because of the overextension to this zone. And in the previous video, yesterday's video, I did show you some other charts, which I probably won't go into, which has these kind of mean reversion overextension zones that I look at. So go and watch yesterday's video. The Russell, I feel like the Russell is holding up a little bit better because of that rotation into smaller and medium caps. And then the VIX, I just had an alert today where the VIX broke one of the key levels that and the alerts I placed live on the yesterday's analysis, which was around this level here. So we broke this level today, and we could be going up higher. And maybe I'll take you to the chart now. Let's see. Let's go to the VIX here on this mean reversion chart. I think it's very important here for the VIX to look at it. We can look at the rest, but I covered it yesterday. I don't want to be repeating the same analysis in every single video. So here you go. We could actually see a spike up until 19 or 20 on the VIX. That would take us to that level that I mentioned on S&P 500, which is around 6,000. It would take us here, 6,200. Okay. Yes, I did mention that we could get the overextension, but we are already in a very, very slightly overextended level. And this would be nice. A key zone here, which is held up a few times, and support, because it was a previous high as well. You see? Previous resistance becomes support, or that area or nearby. This was 6.1K, this is 6.2. Becomes support, and then we move up higher to 6.5 to 6.7k. That'll be the overextension zone if we go and move higher on the S&P. This will be a good buying opportunity actually if we get to this level, or even this. I mean, if we get to this level, then it's definitely a buying opportunity. But if we get into this, there'll be some good buying opportunities in the market. I think that's about it. I mean, we could go to the Russell as well. Similar situation. The NASDAQ, like I said, we already went to that overextended zone on the NASDAQ. So yes, we can go to this area and it would be a nice retest here of previous support. What I would worry about is whether we go shoulder, head, shoulder again, and then a big sell-off. That would be my worry. And I think it's the worry on Bitcoin as well on the weekly, and I'll show you that in a few minutes once we cover the S&P 500, NASDAQ, etc., stock market. But yeah, we could get head and shoulders here and then a bigger sell-off. That's something to bear in mind. In terms of other indexes, there is the Hong Kong Hang Seng Index. I felt like, so yesterday I bought Alibaba, so I bought Baba with the idea that we could go up higher here in Chinese stocks if US stocks sell, and that failed because I was quite tight on the stop loss. So the reason why that failed is I think they're kind of moving together now. Yes, China might be where funds are circulated into, capital rotates into, but they have been moving together. As you can see here from April, it's kind of been on a similar run. And yes, it hasn't been in a big run like the S&P 500, and it hasn't really surpassed the all-time high significantly. But we're at a level here where I think maybe we can now get rotation into China. But it's about timing and find the right opportunity, which I'll be looking at in the next few days, probably, or even today. The DAX, alternative indexes and markets are not looking that great either. It's been on a kind of distribution level here for the DAX for a while, since June. And that would probably summarize how the market's been moving. So since June, the market's been very volatile. Many of my trades that have been showing breakouts have moved positively for a few days and then dropped again. So we haven't really been performing that well the last month or so, just because of the volatility and because of the choppiness of the fake outs that we're getting in some of these stocks. So it's breakout. A few do well, a few do badly, but then ultimately most of them actually fail. So I've had to be very cautious with my trading. That's it. Australia moving pretty well here, but again, overextended zone, overall market because everything dropped with those That's it. I think that's stocks covered. I will be going into some opportunities later. Now, if we go into, I think we should go into Bitcoin, and then we'll go into Ethereum, a few alts. As you can see here, we've had a retest of this zone. So we'll just mark this out. So we had a retest of this zone, right? But what I mentioned in yesterday's video is, and the day before, that this was the key moment. This was the pivot point, 16.8, 16.9, 116.9 as a breakout for short. And yes, we can go a little bit higher. Retest. Yesterday we did the retest that I mentioned, which was we retest here the EMAs or the zone of the breakout, which we did around 16.8, and then we sold off. So that would have been a good opportunity to enter a short trade. And right after that, rejection, sell up. Now we're finding support, and this is historical support here. So previous resistance has become support. If this breaks, we then go into, I think we go to 106 and then maybe even 100 down here. So those will be the two levels, 106 or 100 if we break this. Yes, 110 is a key area as well that we could find support, but I think that kind of pierces after this one. I don't find it too much support around 110, but it could do. It is a support level. That's Bitcoin. In terms of buying here, my worry, what I'm seeing is, are we going to get something like this? So this was what I mentioned in, so the head and shoulders in S&P 500 is on the daily chart. But if you want the cycle to finish in crypto, and we'll discuss whether that cycle will finish soon, it would be a head and shoulder pattern or a double top. So we've had that double top here, 2021, 2022. Here, I think we're developing a head and shoulder pattern. So what we would see, it would be the shoulder, the head, come back down, maybe retest the level here, like 100, 90 something, if we have a big sell-off here. And then we go back up again, break out, maybe even try and do a double top. We'll have to see. And then we sell off. And that sell-off will probably coincide with Q1 or Q2 2026, which is what a lot of traders and investors are saying will be the end of the cycle for crypto. And I think the end of a bull cycle in stocks as well, and it could coincide with other economic problems. That's me looking at the bigger picture, what we could develop. As you can see here, we have 20 MA around 108, which could be a zone that it holds up. I think we have these zones here. So if we do 108, probably around this level, 110, 108 could be a key support level. If that breaks, then we go back to 100. 100 has to be held. The reason being is, if we capture the last year, 100 is a key, is probably the average. So if we get this, if we do, not probably, it definitely is the average. So if we draw a line here in the middle around 100, we've moved up a few percent from 100. We've moved up 24%. And then below, we moved around 24%. So it is the average price in the last 12 months. Okay. It's very, very important that we don't break 100. If we break 100 from here, we are in a bear market. Do not think that it's going to hold. If it's gonna find support at 80 or something like that, I don't think we go bullish again if we break 100, just because it's the average for the last 12 months. It is the average price for the last 52 weeks. That I think that'll be that's a key for me. Definitely has to hold this. If we do go lower, we'll have to see. We could actually get momentum here and go long now, and we'll be trading it. But 100 is the key with the current averages that we have, the current prices and so on. Okay. Personally, I think we go to 108, 110, 106, and then we find a move up high. Yes, we can do ebbs and flows of the market, maybe rise, dip, consolidate, and then we go up higher. We'll see. Could be the buy up here as well, because I did mention in the previous video that we have the cyclical element of halvings, and typically 520, 530 days after the halving, we see the peak of Bitcoin. So that would mean we would have to see that run happen soon. So maybe a dip, a quick buy up, and then the run happens into October. We go to 130, maybe 150, but 130 is my level here so far. Okay, that's crypto. Ethereum. Let's go into Ethereum really quickly. Bouncing nicely here on around the 20 EMA area. It's done it before around this level. Whether that's going to hold up here is questionable. I personally thought that we would maybe find rejection, go a little bit lower. It is also a key level, this previous high in December. So yes, maybe we go a little bit lower, rejection, go here, consolidate, and then we move up higher. 4,000 for me is a good level. It could also go down to 3,700 here before we we see a buy up. But this could be also a key pivot point. So we just have to wait and be patient. Personally, I'm being very, very patient here to not be caught out in a fake out. We could go a little bit deeper. So I'm happy to even get in a bit later just because I sold very well here at 4,600. So even if I buy again around this level, I'm buying cheaper than what I sold, and I'm doing a pretty decent job capturing this move and minimizing risk. Solana, and I think the difference here is Ethereum and Bitcoin have created higher highs and higher lows. Solana hasn't created a higher high here. And the other thing I want to mention is a lot of alts. Let's go into, let's say, Algo, for example. They haven't made a higher high compared to the high. So when we're talking about the highs, it was a higher high in July, sell off, higher low, and then we failed the higher high here. Okay, we still have a chance to maintain the higher low, but if that breaks, then we're looking very bearish. So this was a key moment where this failed. This move didn't go to a higher high. I expected this move to follow through personally, and I thought we can go all the way to November, December of 2024. As you can see here, that euphoric buying, because Trump came out with a executive order to put cryptos in 401ks. Obviously, there's going to be selected cryptos there, but yeah, we didn't see that move happening, and that was a big fail here for me. It could be a consolidation period, maybe, but I was expecting this to follow through, maybe even just up to here. So a lot of alts are in this position where they didn't create a higher high on the daily. Very problematic for alts. Some alts, some of the best performers like Link and Ethereum, did create a higher high and tested that level. I was expecting the rest to follow through. They could be lagging behind, but it's not looking that great. Solana did a double top, so it did a little bit better than the other ones, but it also failed. Okay, so we have to be very cautious here of that big sell-off. And I think it was held back by Bitcoin. Bitcoin did the double top and then came back down with Ethereum doing the bearish divergence. We mentioned in the previous videos the Bitcoin dominance, and right. So with Bitcoin dominance, what I want to see is price moving to around 60, 61%, and then rejecting for us to then move up higher. So we get a dip in the market as Bitcoin moves higher, and then we go down lower here to get an alt season or alts moving really, really well. That's basically what I'm looking at with the Bitcoin dominance. You can also go to the previous video where I went into a little bit more detail with the dominance. I also spoke about USDT dominance, and you'll see here on the chart that it triggered a key moment, which is the breakout of this trend line. We could get a retest, come back down, then go up higher. That would be the bearish scenario for crypto. We move a little bit lower, and then when this tops off on this trend, then we get a rising crypto market and the USDT dropping. This was a key moment for me when I was watching yesterday the charts. It was a key trigger point when the alert went off, and that's when I knew that we were going to go short on that retest on the Bitcoin of the key EMAs, and then a price move lower, so that 13.8 level that I mentioned earlier, and then a move down lower. This was the key trigger point, and I saw the market moving in that direction. This is it for crypto. I want to cover now I want to cover the dollar, gold, and natural gas. We've spoken about natural gas in the previous videos as well, and some key shifts there and seasonality that I think will kick in. The US dollar, personally, I think it's in a sweet spot now to really decide the direction of the market. Personally, I think we go up higher. I think we need a dip in the market so that the US dollar rises. We get a rise in we get a drop in crypto and a drop in stocks. This is the key moment here. 2 videos in a row, I've mentioned this as a key moment, key pivot, key breakout. This is it. If this breaks, then we are short across the board. If this goes down lower, then we will go long in the market. So if we break this trend line, this ascending trend line here, if we break it below, we will go long. So very, very key moment here now with the US dollar. And this is what I'm watching, as well as the VIX and a few other factors. With gold, we've seen a bounce on the trend line. And you can see it now, a bounce on this ascending trend line. And for me, I mentioned it in the video yesterday, this is the key moment to enter a long or to try and enter an early long. You'll get the bounce and break out above here, the 3.4K level or 3.35K level, and then a move with a bit of a cushion because we could get a rejection here. Move up higher, maybe a dip, and then a breakout to 3.5K. It's looking a little bit tricky here. I do like gold. I do like gold right now, and I think if the markets do drop, so the S&P 500, the crypto, there'll be a lot of investors going into gold. It's been in a consolidation phase. It's being bought up, and it looks like it has this overextension potential all the way up to 3.7K. But I'll be looking for 3.5K again around this area, and then we'll see. That's basically what I'm looking for here. Again, we could get the rejection here as well, but you know, we would need to take the risk and see how it develops as and when we take the trade. Natural gas, I see a seasonality play here. Natural gas consolidating. It's showing early signs of a bullish divergence on the RSI. If it holds, lower low, lower high, and we have potential to 3.5, which is a 1 to 4 risk reward here. It's looking very good. I just have to wait and be patient to enter natural gas and a few other commodity plays if I choose to do so. And I think that's it. I will say this: go and subscribe, comment, like the video. Comment and like the video if you enjoyed the content, if you found it valuable, if it's informative. I have tried to inform you guys on when I thought the dip was going to come into the market, and it happened in the last 2 days. Go and also follow me on Instagram and TikTok. The links are below in the description of the video, and also become part of the Discord group. It's a free group, but there's a free section where you get to see my concentrated watch list. So you're not going to get to see all of my trades, but you will get to see what am I watching throughout the day for potential breakouts, for potential swing trades, both in cryptos and stocks. So if you're a trader, could be a way of you finding new opportunities for free. You also get market analysis and insights every day, and macro analysis. So very similar to this, with some other nuances throughout the day. Today's a very important day. We have FOMC minutes, and then Friday we have Jerome Powell speaking. So there will be different things happening as and when the market opens. So being part of that group will get you a little bit more insight into what I'm looking at. That's it for me for today. I'll see you tomorrow.